We have confirmation that there is selling happening in the market. Not only is Bitcoin down 18% from the 126K top, but we're also seeing signs that investors are getting sick of this market, basically bored and looking for bigger returns elsewhere. We've seen the price of Bitcoin stable now for the last 10 months. And stable is probably not the best word here, as we have seen a 30% decline met with a 50+% increase. But over the 10 months, price is essentially the same. So where are they going from this point? How can we see it before others are getting to that point? That's what we're looking at in today's video, along with an update on Bitcoin and is this cycle over? Hit the like button, subscribe to the channel if you're new. Links in the top of the video description for things that I'll talk about today. So first, I just want to go through the update on the price. We haven't seen a breakdown of 108. We got one daily close yesterday, and today, 10 minutes to go. By the time you're seeing this video, you'll have an answer to this, but it seems like Bitcoin will close above the $108,000 level. So that's pretty much the balancing point of the market, the old make or break level. Now to the downside, it's still sitting there, $100,000 to 98K, this yellow area here. On many metrics, no matter whether you're looking at moving averages, our 50% levels, and so on, it seems like everyone is watching this 98 to 100K level. So what happens from there if it breaks down? I think we move into a lower high that will still bring in some greed and excitement and buying frenzy, but I think ultimately it'll probably run into a lower high. Now that's the bearish case scenario. I think we still are in the bullish case because we have not got that breakdown, even though we're seeing investors selling and a lack of interest overall. That is what the data is showing, not only our charts, but also where the money is moving. The market hasn't broken 108, so we still have to lean in on the bullish scenario. The saving grace is still above 115K, so those two have not changed over the last several days after this low was put in around 103, and of course that depends on which exchange you're looking at, but roughly speaking, around 114 to 115 is that first level of support that we need to see Bitcoin get to, and then above that is still at 120. So day after day, not much has changed in that regard. The sentiment is still extreme fear. We're about to get a new reading in less than 10 minutes, and the FOMO finder has jumped up from the lows back here, and also there were some lows here that showed up with panic. You can see in small writing here on the side. Generally, when these two line up, you've got some panic on FOMO finder and extreme fear. It's a good area for at least a temporary low. You can see we got very close a month ago. Panic, extreme fear, small short-term low, ran into a new high, but eventually came back down from that point. Now, one place that they haven't been selling this week is the ETFs. There is still more money flowing in through the ETFs. And the good news there is that it is not extreme levels like we saw at the all-time high. Time after time, it's been a fantastic contrarian signal to do the opposite to what the crowds, the masses are doing as they're buying up in droves into those ETFs. Typically, those extreme levels of buying happen around extreme times. You got a breakout time, and then basically the price goes flat in November. So that's it. Didn't really track much higher than 100K, a few times above, and then it collapsed. And again, we see the same thing. July, big inflows, and then everything dries up. All those buyers have bought at that time, and there is no one left to buy. When people ask why does the price move, it's just buyers and sellers. We saw a prime example of that in the last 2 weeks with gold. People lining up to buy gold and silver, physical gold and silver, not knowing they can just buy the stuff online, lock in a price, and you don't have to show up at the door. The fear that came around that is that refineries were running out of gold and silver. They are going to produce more, and if you lock it in at the price, then you just wait for the gold and silver to turn up. So this is the stupidity, I guess, of all of us, human psychology, when it comes to these moves up and down, the extreme points at the end. Now, we're running into this peak of the 18-year cycle. I think it'll be time in the next month or so to move this yellow dot towards the peak, and eventually it will start to roll over here. Now, this is for the US real estate and economic cycle. That doesn't mean that it also applies to the stock market yet. I think there is still further upside to go in the stock market. as we're seeing here with the bubble. The major signal we're seeing here is that the home builders are rolling over. This also happened in the prior cycle. Home builders rolled over before the S&P 500. Here is your red S&P 500 top, so the stock market topped, and there is your home builders topping around 2005, 2006, lining up with this cycle here. They topped around 2005 to 2006. Same thing happened. S&P 500 kept running and then collapsed after that point. The reason why the S&P 500 can keep running when the US real estate cycle tops is that the S&P 500 is made up of more companies than just home builders. Banks are still making profits. We're seeing massive profits for the largest banks in the US. You've got obviously the AI bubble this time around. Last time we had the dot-com boom of 2000, and things still continued to climb higher towards the end of that cycle as well, even though they had gotten hit. This time AI is still running higher. Therefore, stock markets can keep running higher while the home builders roll over. But it is an early warning sign that there are bigger problems to come in the market. So you start to see it with the US real estate and economic cycle. And what's the economy made up of? Well, it's generally made up of employment. We've begun to see the employment rise here, and that is generally not a good sign. Typically when it rises, it doesn't come back down until it peaks. So you've got the bottoming here in the 60s, big rise higher, bottom again in the mid 70s. That was the end of a real estate cycle in the mid 70s. Then you had that collapse and the next cycle began. You got another bottom here in the late 70s, and then that runs up into the 80s. You had a mid-cycle slowdown there, and then of course, rinse and repeat. As the thing starts to tick up, the unemployment rate ticks up, it's very unlikely that it's going to come back down, especially after it's moved this far from the low. You've got smaller moves up here, and then it ran lower again, even smaller moves, small moves, and a little bit of a low. But this far, generally, it'll keep going from that point. And in regards to the rotation between assets, where we're seeing investors not buying up like they did at the beginning of the cycle, where are investors going next and rotating? If you're a TIA member, we discussed this at the beginning of our live stream this week. So check it out in your Discord weekly live stream. Within that video, I go through my portfolio, how I'm rotating assets. So if you're interested in that, we do have a waiting list now for the new TIA product. Link in the top of the video description. Just subscribe to that. It's right there under free report. You'll get the reports in the meantime until the next education opens up for you guys. So in terms of Bitcoin, where are they going? Well, the obvious one has been gold, and the chart shows that. Gold versus Bitcoin peaked out in March 2024. So basically Bitcoin hit a peak then and then declined, and then hit a second peak in December, basically on that November rally. And so at the time, Bitcoin was worth, at the peak, 34 ounces, declined to 20 ounces, ran up again to 40 ounces. This is all measured in gold, of course, declined to 25 ounces. So still higher highs, higher lows, but the rallies higher were getting smaller. And then enter July and August of this year. So just 3 to 4 months ago, it ran into a high of 36. So you're starting to see a weakness here where people are choosing to invest their money compared to Bitcoin. Now, I don't care about the gold bugs, the Bitcoin maxis, all that sort of stuff. That's leave those discussions for another time, or to waste your time on. Essentially, what you want to do is make money, or at least I assume that's what you want to do. Yeah, I could be making an ass out of myself and you if you don't want to be making money. But at the end of the day, this chart is showing that we're seeing lower highs and marginally lower lows. Now, if this double bottom plays out at 24.5 ounces and we see a nice big move to the upside, that means Bitcoin is getting stronger than gold again. So it needs to rally, break 30 ounces, and then it can have a chance at testing 34 to 36 ounces, which could then put in a higher high. That's what you'd want to see on this chart to suggest that the money is actually coming back to Bitcoin as opposed to forgetting about Bitcoin and going into gold. That's all this is doing. It's measuring the strength of Bitcoin versus gold, similar to what we do with Bitcoin dominance. So where is the money flowing? Is it flowing into Bitcoin, or is it flowing into altcoins? So that's the first one there. We've known about that. We've seen that happening, and the strength of gold soaring compared to Bitcoin. That essentially started back in March of 24. So over a year and a half now. That's how long this rotation has been happening. So if you stayed in Bitcoin, you could be roughly about the same gains as what gold has had through that period. And that's all this is showing. But if this starts to decline and take out the lows, then that means gold is gaining at a faster pace than Bitcoin, or not losing as much as Bitcoin. So basically you're reducing your volatility in your portfolio. If Bitcoin's going down 50%, maybe gold's only going down 20%. So in either case, how do you hold on to the gains, hopefully the gains that you've made? How do you hold on to your wealth? Well, then you've got to look at charts like this. The other one is silver. This has been a big one for us, entering and holding on to this position. I posted about this in June of this year on the channel. June is roughly about here. That's when Bitcoin was buying 2,900 ounces. Now it only buys 2,200, call it 2,300 ounces. So it is down against silver. Silver has been outpacing Bitcoin in that period. We've been putting in lower highs through this entire time, similar sort of tops here, March, December, May, and that August period when Bitcoin topped again, and since has gone down and broken that double bottom. See the difference here with Bitcoin versus gold, still sitting on the double bottom, whereas Bitcoin versus silver is actually in a weaker position. Now it has hit the 50% at 2,100 ounces and has started to bounce, but you've got to be watching out now for any sort of rejection at 2,400 ounces. So if it runs up to like this and then starts to carry on back down, that would be a very weak position for Bitcoin, and you either have to toss up where you want to put your money from that point. And as I said, that's what we go into detail on a weekly basis with our portfolios and answering questions that you guys may have or members have about your own portfolios. It's similar to what happened in the prior cycles. You started to see a big surge up, lots of interest in the market. Again, this cycle, we saw a lot of interest in the market in March 24 and again, November, December 24. And since that point, it has been lackluster compared to those prior booms into those tops. And so as we've continued on with this cycle, I'm starting to think that they were the times that were the extreme greed, that big blow-off euphoric stage of the market. Even though for Bitcoin, the price did go higher, the euphoric times were really February, March, and November, December. And since then, it's just been lackluster. Now, this can turn around. It hasn't yet. It's been about 10 months, and the price is still holding. So that is the positive here for Bitcoin, that although things have gotten quiet, the interest is less, technically speaking, than it was in Q4 of 2024 and also Q1 of 2024. Interest is less, volumes are less, and so on. It's still holding its price, which is a good sign here. Now the breakdown, that would change things. For now, it's still holding up 110. Now the last one I want to show here where investors are choosing to spend their time is the NASDAQ. Bitcoin versus the NASDAQ. Here you go again, the March run up, nice peak, pull back, the November, December run up, peak, and the pullback. And now you can see price of Bitcoin versus the NASDAQ is back at the same price as it was nearly 12 months ago. That's that November top there. And so when markets break down from their highs, it's generally signaling a weaker market here. And so we may see this bubble take off for the NASDAQ. Bitcoin can keep going higher, so we could still see this run higher, but it might not be meeting the same gains that the NASDAQ is doing. Now, I've shared pretty conservative price targets for Bitcoin. I said in January of this year, Bitcoin will hit at least 122, possibly 144. And the price targets chart that I show, we're looking between that 130 to 160. So still within this range of the 100s. Whereas you're going to have some other price targets that I think are ridiculous, even for the next cycle. If you think there are still 4-year cycles playing out, it's not going to hit $1 million. I don't think it's going to happen in the next 5 years at all. Even if Japan chucks in stimulus and the US government's chucking in stimulus and interest rates are dropping, whatever the narrative is at that point, it doesn't seem like it's going to be that $1 million Bitcoin that everyone's waiting for. This time, that would mean Bitcoin would be going from a 2 trillion market cap to a 20 trillion market cap. And gold is the only asset in the world that has ever passed $20 trillion. And that happened recently in the last 12 to 24 months. I think it's very unlikely that we're going to get to those points. And this sort of stuff is really just hopium to build up the bags of the guys who are holding, and especially their Bitcoin treasury companies or whatever funds that they are holding with. All their job to do now is to talk up the assets that they hold. That's all their job is. Buy the assets low if you can, and then talk the shit up out of them. So it doesn't mean I have anything against it, because I want those prices to go up just as much as you do too, but just know that that's what the strategy is. It's not about anything technical that they can see that someone else can't, and all this money printing and so on. It's literally to talk up their bags. The market sentiment now for the S&P 500 still sitting in fear, yet it's at near high prices again, near all-time high prices, and it's following a very similar 5-year cycle that we've been tracking for many, many months now. You can see day after day doing similar things. It's been grinding around, had a bit of a pullback, and now has pushed higher. And again, this is on that move higher. This one here is just an interesting story that we keep watching, because it's almost like the playbook is occurring again. The dump, the move higher quickly, and then trying to decide, do I keep going higher? Yep, going to keep going higher. It seems like it wants to do that right now. You see this nice green bar, and then there's the pullback and so on until we get to Q4. So I think there's still upside to go here for the stock market, as I explained earlier in the video, and that might help Bitcoin also carry higher, but I don't have my sights set on some crazy targets at this point. S&P 500 looking good, NASDAQ also looking good, similar sort of pathway here to those highs, so further upside to go here for the stock markets, especially with that AI bubble. The Dow Jones still holding out, and as a quick look over the global market, so everything else going on around the world, Australia near all-time highs, the top 50 in Europe, that is a new all-time high set on Tuesday this week. I haven't talked about all-time highs for quite some time. So the rest of the world is still going through the everything bubble. Stock markets at highs, real estate in other countries at highs. The US may have topped out in 2025 for their real estate prices. Let's carry on with the stock markets. Look at this. The UK, new all-time highs. The new day has just opened, new all-time high again. Germany has come off a new all-time high from 2 weeks ago. France was the laggard, now hit a new all-time high this week. The Netherlands, new all-time high 2 days ago and yesterday. China hits a new 4-year high. See on there, China a 50 here, getting very close to those. Oh, sorry, this is a 1-year high, but for the Hang Seng, so Hong Kong and China, they hit a new 4-year high a couple of weeks ago on the rally again after higher lows. Japan, new all-time highs on Tuesday this week. The Nifty, just 2%, less than 2% away from a new all-time high after a pretty severe decline. The rest of the world is still heading higher, even though things seem way out of proportion with what's going on, whether it's tariffs, whether you think it's wars, whether it's money printing, whatever the story is, the wall of worry continues higher, and we're seeing that in the prices around the globe. So we possibly still have a little further to go here for the stock market cycle. Hopefully some of that can carry through to Bitcoin. And of course, if you're holding altcoins, fingers crossed, it also flows through to the altcoins. Fingers crossed, not a bad look here as well. Daily exchange volume has at least slowed the bleed. The bleed's now at 63 billion, yesterday 64, 67, 72, the days prior, but it's not yet back at these $40 billion lows. So we don't want to see it there. We just want to see it continue to put in higher lows. It's done it before, break out, pull back into the zone, and consolidate for many weeks before it broke out again. So staying above those lows gives some hopium to what's coming next. The leverage traders, they seem like they've washed up at this point. 226 million in the last 24 hours. A significant decline compared to what we saw over the last several days. And of course, the $20 billion the other week. The long-short ratio over the last 24 hours has flipped yet again to the short side. So that's 51.5 to 48.5, giving you a roughly 3% difference. So we might be in for a bit of a push higher here. And if I can throw you just a little bit more hopium, thanks to Michael's Elliott wave cycle, we're still watching to see if the top is in at this point, and we'll know that around that breakdown of $3.5 to $3.6 trillion, like we've looked at with Bitcoin around that 98 to 100K level. That's going to be a key level for this bull market. Otherwise, to the upside, we're still looking for bigger moves into the end of wave 3, big correction, and then finish us off into that wave 5. So some more hopium here, looking at open interest for Bitcoin. So Bitcoin open interest drops, forward returns. Basically, when you see open interest just die off, that means any of the investors, traders looking to buy, have their positions open, ready to go for that next trading session. When that drops off, especially after significant events like we saw with the $20 billion liquidation day, the forward returns from that point are typically positive, generally positive. You can see that from these here with 10 days, 30 days, 90 days, 120 days. They all have pretty good returns moving forward. I'm not suggesting that there is at least 4 months to go in the bull market. I'm just looking at the data here. Data that these guys, or Balto's put together here, quick and dirty. The look at the win rates have all been relatively positive. Forward returns by events, relatively positive. Bitcoin open interest with drop events, relatively positive in the bull market. And Bitcoin price at open interest drop events, relatively bullish. You can see this is where the drop events were, red arrows. Let's zoom in a little bit, red arrows, red arrows. Then comes the move higher. But that's unless you're in a bear market. Look at these red ones right here. From the top, all-time high, red open interest drops, all-time high, red interest, the open interest drops, runs into a lower high, and then continues down, bigger lower high, continues down, open interest drops, lower high, continues down, and finally you get to the end of the bear market. So some hopium there, I hope. That's showing us that there is still the potential for this market to run higher. But the line in the sand, that breaking point, I think is getting very, very clear the longer this goes on. You know, how many days that we've been tracking now and not moving higher, but also not moving lower. The USDT dominance is doing the same thing. It is now consolidating above the resistance. We need, as bulls anyway, need to see this break lower, need to see it go underneath 4.75%. Otherwise, you've got to have your hat on for the bearish side too. You just can't ignore it. If this keeps going higher, that is not a good sign for long-only traders. You either take some profits, rotate into something else, or if you're trading, then you've got to go the other way in the market. You've got to be going short because USDT is gaining in dominance. That is the safe place, and everything else is where people are fleeing from. This was what happened last cycle. There is your all-time high November. It was a higher low for the dominance of USDT, meaning less money in the space, even though Bitcoin went higher. And then it rallied higher. You had this pullback, big liquidation event there, big drop there in December. So it was a nice spike, similar to what we saw the other week, big spike. Market runs higher, pulls back, market runs higher, potentially on this pullback, and then it just keeps going. And this is where people hang on and hope that it's coming back in their favor. They hang on and hope through here, and then eventually you get this drop, which means Bitcoin's going up into a higher low, and then it just shits all over them yet again into these lows, lows for Bitcoin and highs for the dominance. So we're potentially on the verge of this. The only thing that I think can break this now, breakbacks underneath 4.6% and closes and consolidation here. Notice how that happened again. There is the highs of November, December, which I think is the extreme greed top for the market, the euphoric tops. Same thing for March of 2024. They're the euphoric tops. People are saying, why don't we see a euphoric top now? It's possible that we saw the euphoric top in March 24 and November 24, like we saw with the prior cycle where the euphoric tops were between January and April of 2021. Here is January. Here and then through to April here, and that all occurred through that period. We saw it again here, and then the market dumps. Of course, USDT will go up. Again here, extreme greed, market dumps, and now we're at a higher low. So pay attention to this moving forward. Price targets, I've still got them very conservative. This is what I said earlier on, the mid 130s, mid 140s. We'll leave it at that until the market proves itself. Otherwise, if we can break to these and get into this really nice big moves higher, MicroStrategy still failing to get anywhere of safety above the 50% level, which we know from last time basically collapsed and Bitcoin did not see any more new all-time highs from that point. So there's the orange line, and MicroStrategy came down basically 80 something percent from the high. It's on the verge again of breaking 280 before it continues lower. Cryptos against their Bitcoin value have some of these have broken underneath key levels, just like Solana here, still underneath the key level of 0.0018. I don't think you're going to see too much from Solana unless it can break above that and then test this 50% again. The 0.0022 is the key level here for Solana to show some signs of an altcoin season for itself. Ethereum USD still holding out all right, but it really does need to get back above 4,100, all those previous highs. Otherwise, it's at risk of forming consolidation above the previous highs, which we know is a weak sign. And ETH BTC also on the decline here again. It's got some support back at 3.2%, but it also needs to get a quick turnaround in the coming weeks, like we've looked at for a time frame, end of October into November for more of these altcoins, but for Bitcoin to show its hand probably by the end of October so that we can at least start to see a turnaround here for prices. So the bull market isn't over yet, but hopefully from that analysis and the data that we're reflecting on day by day, it's showing that it is really at a critical point right now. Breakdowns are not a good sign this late in the cycle. And if we can consolidate, it needs to start happening relatively quickly. So still can't answer that definitively, but we do have key turning points that could answer that question. Where are investors going? Well, we're seeing it already. We're seeing them rotate into precious metals. We're seeing them rotate into stocks. And they seem like they are getting out of the market, or at least not as interested, maybe not allocating as much capital to these markets as they once were. Keep your fingers crossed for a close above 115. And if you are a member, check out the live stream we did this week by going into live stream on your Discord. And if you want to get onto the waiting list, free report, name, email address, hit subscribe, and you will be notified when the new education comes out. Otherwise, I'll see you guys back here at the next video or on Instagram for more Q&As in the future. Only use the links in the video description. Don't get scammed out there by fake accounts. And I'll see you guys back here at the next video. Have a fantastic weekend. Cheers.